Hi, and welcome again to today's edition of Market Analysis. For today, October the 14th, Friday, October the 14th, I'm Giovanni Benacour, analyst and trader with Vantage Markets. Well, what we witnessed yesterday was a massive rally, one that came out of nowhere, and it left market observers like yours truly wondering what the heck just happened. There wasn't any new data, no headline making speeches, no event that occurred just after the open to spur such a move. It literally came out of nowhere and left us grasping for possible reasons. The Talking Heads once penned the song Stop Making Sense. And perhaps we can recall the late Jack Bogle, founder of the Vanguard Group, who once said, "Nobody knows nothing." And these three words can sum up everything you need to know about the investment industry. The stock market practically took it to heart, launching into a huge surge in response to an inflation reading that was universally regarded as far too high. What gives them? That seems truer than ever after the stock market did a JoJo move on Thursday. Inflation numbers came in hot, reinforcing expectations for more steep Federal Reserve interest rate hikes. All three major stock indices swiftly fell. Then, as if by magic, they rebounded to finish up on the day. The most likely explanation is a technical one. The S&P 500 at its low had retraced half the gain it had made from the COVID low in 2020 to its peak in January 2022. That's an important level for market technicians. And when it was hit, it appeared to set off a wave of profit taking in put options that had become profitable, which translated into actual buying, especially as those who were short the market got squeezed, and the rest, as they say, is history. There's no dismissing September's consumer price index. The CPI rose 0.4% in September, up from 0.1% in August, and above estimates for 0.2%. Core consumer prices, which don't include food and energy, rose 0.6% above forecast for 0.4% and unchanged from August. CPI rose 8.2% year over year, down a tick from 8.3, but core CPI climbed 6.6% from 6.3%. Other than the car and apparel prices falling, there was little in the report that inflation was anywhere near tamed. What should be clear is that the inflation report was definitely bad news. The Fed will certainly keep jacking up borrowing costs as quickly as it can for the foreseeable future. Now, that's going to be toxic for markets and the economy. Earnings reports from JP Morgan, Wells Fargo, Morgan Stanley, and Citi will report today will give executives a chance to say more about what they expect. The talk of recession will probably shift from a question of if there will be one to how bad it will be. And one need to look no further than the UK to see how rising interest rates are also prone to pricing surprises. Higher bond yields have pushed pension funds, normally considered a bastion of investing conservatism, right to the brink. The bottom line is that a sustained stock rally looks highly unlikely before the Fed finishes raising rates, and it's too early to tell when that might be. Nobody knows anything or nobody knows nothing. It's an unsatisfying reason, especially in the midst of a bear market, and everyone looking for a narrative that could help reverse the pain losses. But sometimes market moves more move of positioning and trading, not for any fundamental reason. Sometimes even a 3% gain is just noise. Now, with that being said, let's take a look at what we can expect in today's market. Taking a look at the daily chart of the Nasdaq, we can see how we yesterday we had obviously those movements, and we are obviously above the 11,000 psychological support level, trading into our pivot point. From this pivot point above A, we can expect the market to come in and take an attempt at 11,400 as a resistance, psychological resistance. Now, the same token goes for the S&P, but the S&P is already above our pivot point. So the continuation to of the rally towards the resistance of 3750 that can be appreciated. Then we have the Dow Jones as well. 30,500 is our target, initial target, one that has been met. We can contemplate 3060, 3070. Then we have crude oil. Crude oil, I'm contemplating that crude oil today will be in a consolidation stage, just really trading laterally, ranging around the pivot point. Then we have gold. Gold is really looking to stay above that 1650 psychological level. I have obviously 1642 as my support, which is that low that we made on the 12th. But I assume, and I am thinking, I'm contemplating that the dollar index is going to also be in a range situation, so we could probably see gold also stay around the pivot point. Then we have the euro. Euro is looking strongly to come back above 0.98, and that could probably happen as the RSI is really neutral. Then we have the British pound. I think the British pound is gonna retrace somewhat today, down to 111.50. And then we have the Canadian dollar. Canadian dollar also, I think it's gonna just be another quiet day, ranging around the pivot point of 137.59. As long as we have here the dollar index to be calm, to stay above 112, and just really be doing that ranging consolidation stage around 112. That's my estimates for today. Have a fantastic weekend, and I will see you guys on Monday. Thank you.